A lot of questions came in about MNAV. A lot of people curious about this. So do you think it's possible for MNAV to drop below 1 in a bear market? And if it does...
Is it just me, or like, you know, I love that reel that's I saw on Twitter where it's a clip of like 60 seconds of somebody asking him a question, a bunch of different interviews.
Oh, yeah.
It's like he's so brilliant that he's like both bothered, but then at the same time happy that he's answering these questions where it's like, oh, fuck, I got to explain this again.
Who knows what's going on in that cranium?
I don't know, but he definitely brings the heat.
How would that impact your strategy?
Yeah, I think an important point on that is sometimes I see like Twitter analysts saying, oh, this is just like GBTC and Grayscale went below 1 times NAV before. And what they miss is that Grayscale was a trust company, a closed-in trust, and we're an operating company. And a trust company doesn't have the option to refinance or take on leverage or to sell securities, buy securities, recapitalize, or buy their own stock back. And so when you should think of a trust company as, no, I'm gonna pick the wrong metaphor and people will hate me. It's just a form of corporate entity that has no operational flexibility to manage its capital structure. Operating companies have much more flexibility. We can buy stock, sell stock, recapitalize. We can take on debt to fix or to close a gap. So at the end of the day, I think that the one example people have in the crypto market, Grayscale trading below NAV, was because it was a trust, not an operating company. Theoretically, here, when an operating company or a company doing something trades below NAV, it's because the investors have lost faith in the management team and they think the management team is destroying shareholder value by acting irrationally. So for example, if I were to give myself $1 billion a year pay package and announce it, the stock would dive and people would say, what if I just said, hey, I have $64 billion of Bitcoin, I'm gonna pay myself $1 billion a year for the next 64 years. People would lose faith in the company. They would say the management team is looting the shareholders. They dump the stock would trade below NAV. It's because the management team is doing something out of alignment with the interest of the shareholders that the stock would trade below NAV. Now, having said all of that, we constructed the company so that the company can generate yield and generate gains even at NAV or below NAV. For example, we have $64 billion of Bitcoin. If the stock were to trade to $1 tomorrow, well, we wouldn't sell the equity, duh. We would just sell the preferred stock. We would be selling stock over collateralized 10 to 1 against Bitcoin with a 10% yield, and we would generate billions of dollars of gains selling the preferred or the fixed income instrument. At some point, people would say, wow, they're generating gains anyway, and then the value would come back into the equity. Or we would sell, you sell a preferred stock. If someone's stupid enough to short my stock to $1, I would sell $1 billion of the preferred and I would buy back the common stock, right? And I would just recapitalize the company, right? And then the common stock would fly through the roof and then they would be complaining that we bought the thing that they were selling. So operating companies can do this. Trust companies, trust funds, ETFs, they can't do this. A closed-in trust can't do what I described. So the way that I see the world and the way that we see the world is when someone irrationally misprices something, then if it's mispriced too low, we buy it. And if it's, and if it's priced at a massive premium, we might sell it, not to drive the price down, but just to capture the premium. And we construct all the preferred so that I sell this preferred that people want US dollar yield. I sell this preferred to people that want convertible. I sell this preferred to people that want Japanese.
Dude, he's gonna have the most valuable company in the world, right? Like if any of these other companies try to come in, like let's say Berkshire Hathaway buys $100 billion worth of Bitcoin, they'll have more Bitcoin, but they don't have the flexibility that he has. And then in them doing so, they're going to drive the price up, and they're going to give him the ability to dilute, sell bonds, whatever, to get more Bitcoin. Like, can anybody catch him?
Well, the one caveat with the Berkshire analogy, he's saying that if they only carved out $100 billion of their cash to buy Bitcoin and they remain diversified, they couldn't execute on this specific 100% Bitcoin strategy that he's employing. Now, the caveat there is, well, what if Buffett wakes up tomorrow? Actually, he's not the guy running it anymore. Whoever, Berkshire's CEO wakes up and says, you know what, we're liquidating it all for Bitcoin and we're going to run this strategy. He'd have a hard time catching up with that.
God, that makes sense.
Yield. I'll sell this thing to someone that might want a euro yield. I will create this for people that want leverage, and ultimately we're creating value. And if one of the securities trades weak, we either stop selling it or we reverse it and start buying it. And if you don't go to business school, then I'll boil it down to one sentence. Here's business school: keep your options open, right? That's what you learn in business school. And how do you create value? You have to generate option value. So you'd say, well, why do you have that preferred and this preferred, and why do you do this some days and not do it other days? We're generating optionality. The more optionality we generate, the more opportunity we have. The Strife product. One day someone will start to talk about interest rates collapsing. Maybe there'll be someone writing a story about how the Federal Reserve is under pressure to lower its interest rates, and SOFR will dive, or the forward interest rate curve will dive, and Strife will trade up. And it has nothing to do with Bitcoin. It has nothing to do with our equity. It has nothing to do with the MNAV. It has to do with people's opinion of whether or not Jerome Powell is going to change his something. And so we're creating optionality into the credit market. Like, someone else will say, well, I think the S&P is going to start to provide a credit rating for Bitcoin companies like MSTR. And then the price of those things will readjust, and there'll be a huge surge of demand. And we will, if we have an ATM, when that surge of demand comes, we can sell $10 billion in a week. If we don't have an ATM and that surge of demand comes, we sell nothing in a week, and we talk to some bankers for 4 weeks, and then by the time we do something, the opportunity is lost. So the thing that makes our company a monster is having multiple ATMs in multiple capital markets, all of them correlated to different forecasts, like your forecast of interest rates, your forecast of Bitcoin volatility, your forecast of Bitcoin itself, your forecast of crypto policy. All of those futures are changing all the time. We're straddling that future, and we're able to either buy or sell or hedge any of them in real time, 1 million, 10 million, 100 million, or 1 billion, right? And sometimes you do nothing for you could do nothing for a month or 2 months, and then you could do $2 billion in 2 hours, right? So, and maybe you'll do something, consistently, but we built the business to straddle the crypto economy and the traditional finance economy, and to monetize volatility, and we're pretty thoughtful about how we do it. So, and this is the joke.
I said this earlier, I don't know if this is our last video or this one, but that Saylor had said something to the effect that there's only a certain throughput at which a profound idea can spread across the minds of men in the world. That's why Bitcoin had not caught on more broadly yet. I think you could interpret the entirety of Bitcoin strategy as an arbitrage of that situation, right? He's plugging into every credit market in the world, basically enacting Gresham's law. So he's selling the weak money, which is any fucking credit instrument you can think of, basically, using it to acquire the hard money and hoard it, which then adds to the volatility of a stock, which then increases market capitalization, which then lets him issue even more of that into more markets at higher volumes and more options. And he just wash, rinse, repeat.
Creates a feedback loop.
Feedback loop.
And there's a flywheel effect too. The bigger it is, the faster it goes.
Of course. Now, as long as you manage all of that intelligently, which that comes down to the terms of the debt itself, right? Is it mark to market? What is the frequency? When, you know, what are the liquidation clauses? Blah, 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 which, as I've heard him talk about before, they're pretty smart on all of that, thinking about what debt not to take on. But I guess the point I was really driving at is that it is just, you've arrived at an idea. 99.9% of the world has not yet arrived at that idea. And it is this disruption of gold and everything else that's built on top of gold as money, which is what Bitcoin is doing.
Yeah.
And so then you are now selling all of these credit insert, you call them whatever you want. Basically, it's inferior money, inferior assets to Bitcoin. You're selling that to everyone that hasn't caught up to you intellectually. Yeah. And then using those proceeds, basically leveraging their own balance sheet when they buy your stuff to buy Bitcoin.
Yes.
And so it becomes like an access pipeline to every market in the world. And then he's putting all the bells and whistles on it with the optionality and the different yields and different this and that and, you know, preferred conversions and all that. And yeah, it's a strategy that I think it is basically the same reason why Bitcoin eats the world. It is it goes back to Gresham's law, which Gresham's law basically says bad money drives good money out of circulation. So when they used to clip coins and they would issue, you know, a coin that said this is 1 gram of gold, but it had been debased and it was actually 0.9 grams of gold.
Yeah.
Well, people would spend the inferior money that had the same face value but lower actual metallic quantity, and they would hoard the 100% full coin. So in that way, the bad money drives the good money out of circulation. So he's basically issuing quote unquote bad money to hoard the good money.
And offering all these products to people who are unaware of that or don't have access to the underlying asset.
Well, it's people that are, whether they don't have access to it, can't buy it due to some, you know, clause or mandate inside of their endowment or whatever the thing may be. Or they're just ignorant of it, right? There's a lot of people that don't know anything about strategy or Bitcoin, but they saw that the stock price is up 100x in the past 5 years. Let me buy some of their preferreds. Yeah. And so that's the arbitrage that, as I interpret it, how it's been played out.
What risk do you see?
Well, it's all the debt risk. All the debt risk, right? How do you manage all of that? So
yeah,
I don't know. I'm sure they have a very sophisticated framework for managing the debt, right? And if Bitcoin were to draw down to some crazy number and stay there for a long time, what would they do? You know, I'm sure they have contingency plans in place, but that is the risk. It is still debt. You can still get liquidated. And going back in time, you know, he doesn't talk about this much, but there was a point. He shared this with me. I think he was like, I don't know if this still holds, but at one point he had lost more money in one day than any other human in the history of the world. And like around the .com crash, I think he lost like billions in a day. Like his stock price was down 90-something% basically overnight. Yeah. And I don't know, I haven't fully investigated the story, but he was sharing that he thought he still held that title. I don't know if that's still the case, but really? he's been to this rodeo. You know? And so that would lend me to believe that he has done extreme diligence. Yeah. Like when you've been through that much pain, you've probably learned a lot through the process, and he's probably taking every imaginable precaution to prevent that from happening again.
He's clearly, he's brilliant. I love listening to him, you know. The lengths that he goes to, you know, and his ability to explain things, the examples that he pulls out, it's just so readily available. His thought process is clearly very deep.
Yeah.
If you're a closed-end trust and you trade below NAV, that's death. If you're an operating company and we trade below NAV, we just get to monetize that. That's good for me. right? I mean, arguably, the more irrational the market it is, the better it is. If you were to short our stock down to 10% of NAV, we would make billions and billions of dollars a day, right? And so we have a very anti-fragile structure, and I think we're pretty optimistic about the prospects there, because I'm quite sure the market will stay volatile.
Thanks for watching. If you enjoyed this episode, click here to find more just like it, and here to find our most recent episode. Also, make sure to like this video to help shine light on the corruption of money, and be sure to subscribe to this channel to stay connected.